Biggest mistake that I see people in their 20s make is they think, I've got nothing but time on my side. One of the biggest lies in personal finance that is being told, that I think people have kind of universally accepted and bought into, is that the younger you are, the more risk you can take. Now, if you think about that, it just doesn't make any sense on the surface level, yet people just kind of like live this idea that that is the case. I'm gonna tell you, the younger you are, the less risk you have to take, because you have time and compounding on your side. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, we're gonna be talking about how to avoid specific financial mistakes that people classically make in each decade of their life. Now, I'm gonna go through this decade by decade, and I wanna talk about the number one mistake that I see people make in that specific decade. Now, there may be a little overlap. I'm gonna try to keep this as simple as possible, but let's just get right into this. So, during your 20s, check this out. So the biggest mistake that I see people in their 20s make is they think, I've got nothing but time on my side. One of the biggest lies in personal finance that is being told, that I think people have kind of universally accepted and bought into, is that the younger you are, the more risk you can take. Now, if you think about that, it just doesn't make any sense on the surface level, yet people just kind of like live this idea that that is the case. I'm gonna tell you, the younger you are, the less risk you have to take, because you have time and compounding on your side. The biggest mistake that I find people make, and this is overall, now obviously we wanna start in our 20s. So I think the 20s here, I've got two things, is A, you need to start saving earlier. You need to start saving money. Save money fast. People are just not saving enough money in their 20s. Now, notice I use the word saving, not investing, is because the biggest mistake is the fact that they invest before they save. Now, the bottom line is, if you look at the statistics around investing, a lot of these companies out there do these different, surveys and whatnot that check out how do people actually invest? What are people's real returns? Like Vanguard does a lot of this stuff where they say, okay, well, the S&P may have averaged 8%, right? Hypothetically, even though it's not quite as good when you really break it all down. But let's just say hypothetically the S&P 500 index averaged 8%. Well, the average person investing in that index only gets 2.36%, right, over the past 30 years. Why is that the case? It's because of human behavior. Well, why is human behavior that way? It's because when we're investing in accounts before we have saved enough money, we don't have enough savings, we don't have our emergency fund, we don't have an opportunity fund. What happens is we're making ourselves susceptible to life. The market is linear, right? The market goes up and it comes down. It goes up and it comes down. Like, it's always going to trend up. But the bottom line is, if you're investing during these times, what happens is when the market goes down, you lose your job, right? You lose your job, you have income go down. And so what happens is you have to liquidate negatively performing assets because you went out and you invested in your 20s, because the younger you are, the more risk you could take, right? But because now by the time you hit 30, right, and then we have a down market and all of a sudden, boom, you lost money. And so because you didn't have enough savings and you didn't structure your life properly, you're going down and you're liquidating all this just to survive. And so you got to start over. You lost a decade of your life and your ability to save and accomplish your financial goals. And if you do that, all that has to do is happen one time to you in your 40-year productive work cycle. And it's going to make it really infinitely more challenging for you to achieve your objectives. So that is the number one mistake in your 20s. Now let's hop to the 30s. The number one mistake I see people make in the 30s is buying into the idea that they have to invest for the long term, and making sure that it's this buy and hold strategy, that even if you save enough, thinking, let's just assume, okay, you solve the mistake, and that's how I'm gonna kind of handle this. You solve the mistake and you save enough money. Now you're gonna start investing. What are you gonna invest in? That becomes a question. The buy and hold mentality, just buy and hold, ride the ups, ride the downs. If you just hold it, the market will recover. That may be true, right? But the bottom line is, when you look at these markets, this environment right here, this environment is when wealth is created. The wealthier people of the world, the wealthy, get wealthier, the middle class shrinks in these times of economic challenge. And so when we look at that and we know that that's the case, my question is, if we know that the market is cyclical, it's not linear, so it's just not going to go up at this nice compounded straight line that everybody wants you to kind of think when you buy and hold, it's going to have these bumps. We're going through these bumps right now. Imagine what your life would look like right now as the stock market is going down, as we're worried about where the real estate market's going down, as the crypto markets are going down, all these things. Imagine how different your life would be if you were not exposed to the market risk, but in addition to the exposure that you did have in the market, with all that you had savings of like 1 year of liquidity, right, of your income. If you had a year of liquidity of cash and you were able to, as the market goes down, and be able to have that as an opportunity fund, can you imagine how much different you feel about the environment? And so the idea of the biggest mistake that people make in their 30s is the fact that they go out and they buy into the buy and hold, B&H, I'm going to call it, the buy and hold mentality. What we need to do is get rid of the buy and hold mentality, and we need to fix that, and we need to start investing for cash flow. We need to invest for cash flow, right? Cash flow hacking is what I call it. So we need to implement cash flow hacking. If you haven't checked this out, I actually wrote a book on the importance of cash flow hacking, how you can reach financial freedom in 10 years or less. Here's the deal. When we look at this is the classic career cycle. You work 10, 20, 30, 40 to 45 years, right? That's the idea. You go work 20 or 30, 40 to 45 years and you hope that you retire with enough. But the bottom line is you're doing this because you're trying to you've bought into these paradigms. The bottom line is if you start at 20 or whatever age you start at, you should be able to be retired completely financially free in 15 to 20 years at the most. I'm going to tell you 10 to 15 years is ultimately, if you really commit to this, that's what you can do. But that is the mistake that people make in their 30s. And so how do you solve that mistake? You have to go out and you have to invest for cash flow assets. I've got a lot of different videos on that topic. I'm not going to get into great detail about that as we go through here. But the biggest mistake that we make in the 40s, I'm going to jump ahead. Let's face it, in our 40s, most of us have families, most of us are married with a spouse and kids and all that stuff, whether you have a wife or a husband and kids, whatever it is. But the 40s, these are our peak spending years, right? So peak spending. So the biggest mistake that we make in these peak spending years is that we're not operating efficiently with our money. We don't have a financial system. And ultimately, this is the biggest challenge. If you solve the problem in the 20s, chances are it's going to be solved in the 40s as well. But here's the deal. I talk to people every single day, and those people in their 40s, because I'm 42, and it's like all marketing as I do these videos. Most of your audience looks like you, so I'm going to tell you my analytics on this channel are crazy. It's 86% of people that watch my videos are between the age of 35 and 55, right? And so, and they're males between that age, and I got some women that watch, but it's mostly males between the age of 35 and 55, and it's just your audience always looks like you for the most part from a marketing perspective. So I get a lot of people in their 40s that reach out to me during their peak spending years. They haven't got it all figured out, so they're just trying to play catch up in their 40s, right? And so if that's you and you're in your 40s, my encouragement to you is anything measured improves. It's all about financial efficiency. It's all about implementing a financial system. Not having a system, not having a budget, not having a plan. If you don't have a plan that you're creating and doing the Stephen Covey 7 Habits of Highly Effective People, begin with the end in mind, reverse engineer plan to get there. And if you don't have a system to help you implement that plan, you're never going to be able to succeed when it comes to your money. And so once again, it goes back. You got to have a system. That's why I do this. You don't have to do my thing. You don't have to buy into this, but you got to do something. You got to be intentional. That's why I created my company, Life 180, living intentionally for excellence. That's what it's all about. You got to LIFE. You got to be intentional. You got to have in your mind the life that you want to create the life that you want to live, and then reverse engineer a process to get there and go do it. That's what you can do. Now, even if you're starting in your 40s, I'm going to tell you it's not too late, because remember, you're probably, if you haven't saved enough and you feel like you're behind the 8 ball, maybe you only got 50 to 100 grand saved and you're like, oh my gosh, there's no way I'm going to be able to catch up and get where I need to go by the time I'm in my 60s. There is, I call cash flow hacking, I call it the retirement rescue plan, because it is the way when we start investing for cash flow, it's going to help you accelerate the results in your life and you have control. Now in your 50s, A lot of people, maybe by the time you've gotten to your 50s, you have different assets, your risks become, I guess, more relevant in your life, like the market risks, the sequence of return risks, all these different things that go on. You want to take risk off the table. And so that's where you start needing to look at, how am I going to have a plan that's going to guarantee the income when I get in my retirement years? Maybe you want to retire in your 50s, maybe you got 10 to 15 years left and you're looking to retire in your 60s, but now you start having to look at the market cycles and you have to start looking at, okay, with what's going on right now, think about it. If you were in your 50s in 2008, you're like, oh my gosh, thank God this didn't happen when I was retiring. But now we're in this environment right now where the stock market's going through this big downturn. There's a lot of uncertainty. And now you're in your 60s, you were in your 50s then, now you're in your 60s, and now you're like, oh my gosh, this is repeating this cycle. Well, that's because the market is cyclical. It's not linear. It's going to go up and down. And so how do you take advantage of this, right? And so you got to position yourself to be able to withstand the market conditions, and you need to start taking a certain percentage of your income, which, by the way, this is solved if you invest for cash flow up here, because it's not about your net worth, it's about the cash flow that you have going through your life. But during your 50s, you need to start either investing for cash flow and making sure that you have that cash flow coming in on a month-by-month, year-by-year basis, and that is controlled. Or you need to put yourself in a position where you're utilizing other traditional assets to optimize your retirement portfolio and guarantee. Tom Hegna talks about this all the time, paychecks and playchecks. When you retire, you have an income that you're used to having. And so when you retire, you give up your paycheck. And so you need to create your own pension that is your paycheck. You need to replace your paycheck with assets that you've saved and created. So your 50s, you got to prepare for that. And so then it gets down into my 60s, into the 60s and beyond. During retirement years, the biggest mistake that people make is that they just don't take this stuff into consideration. They don't have a plan, an optimized retirement plan that guarantees that they can live their standard of living for the rest of their life, that their lifestyle is covered, that their bills are covered, and their lifestyle, whether you want to travel, spend time with grandkids, go on cruises, do whatever it is that you want to do with your husband or your wife, with your grandkids, with your kids, like whatever, your family. It is what it is. You got to make sure it's paychecks and playchecks. You want to make sure your paycheck is insulated. All the money that you've saved up, you want to protect it. And in retirement, you want to make sure that you guarantee that income is going to be there to make sure your bills are covered. And then the playchecks, you want to make sure that your lifestyle, because it doesn't matter if you have $2 million, right? What matters is, how is that $2 million going to last you 35 years? How is it going to insulate and protect and guarantee that your lifestyle isn't going to have to take a step backwards during those years, right? That's what it's all about. And so that is the biggest mistake that I see people make, is not thinking proactively about that, having to be reactive. And anytime we're acting reactively with our money, we're not going to be making the best decision possible. So those are the greatest mistakes that I see people make decade by decade. If you have any questions, comment in the comment section below. I'll do my best to engage with every single one. If you haven't already, make sure you subscribe, hit the bell, that way you get notified. I got videos on personal finance coming out literally every single day. If you haven't yet, go check me out on TikTok at Real Chris Kirkpatrick. I do short videos over there all day long, a couple videos a day. It's pretty fun. I love it. It's a fun little platform. But that's it. Until next video, have a blessed, inspirational day. We'll talk soon. See ya.